So traders, investors are starting to get a little bit too greedy for what's going on right. And I believe that the greed that is happening right now and starting to creep up in the markets is going to suck them in, and we're going to probably see some more downside on the on there. But also, I want to talk about the Fed pausing, pivoting, and what's going to happen with interest rates, and a potential play that I'm looking at right now to take advantage of that potential reversal, and how to actually make some money from when the Fed does pause and pivot and possibly even start to reverse, and even looking at the interest rates there. I'm going to be sharing with you some things I've been looking at right now for me personally that could that when that happens, we could do some really, really good investment opportunities. So I'll share all that with you in today's market. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so what I want to do right now is I'm doing something special. I'm actually giving away a free trial to my entire private inner circle coaching program, an absolute free trial to that. This is for today only. Very first thing in the description, guys, go click on that, go register. I'm going to give you a free training to talk to you about how I actually trade the markets. So you're going to learn how my actual trading system and all the details. And then secondly, you're going to get actually today I'm running an absolute just amazing thank you for being my subscriber sale special here, where I'm going to allow you to try out my entire coaching program for free. But I'm doing this for today. It's the very first link in the description, guys. Go get that right now before it ends. Again, you can try it all out for free. And if you're not happy, then you don't have to pay, right? So one thing I'm looking at here is I'm noticing right now that we are still sort of just not really doing much right now when it comes to the Dow Jones, as you can see. So the Dow Jones, really a bit of a nothing day, but what's happening right now is we're still pretty far away from this moving average, right? So we're still pretty far away from the moving average here. So I wouldn't be too surprised to see if this thing starts to come back. As you can see, we're starting to slow a little bit. And if I bring on my moving averages here, yeah, we're starting to slow just a little bit. So we can see we went strong up, and now we're starting to slowly go up. So I wouldn't be too surprised. We are actually at that resistance level there too, and that's that level through. This is that level that's coming down with the actual with the Dow Jones. You can see where we're at right now. So we can see that there. And so what I'm looking at was we're possibly going to get something like that, which will cause the false breakout. If we do get something like that tomorrow, then this whole upward leg through here is going to come to an end, right? And then we're probably likely to then see at least on a least basis getting a pullback down towards the 52 moving average, and then we can see what actually happens from there. So that's what I'm looking at with the Dow Jones. On the S&P 500, let's actually just bring this up here. I'm noticing we're still in this overall sort of just pullback phase through here, right? You can see we had a move down, and we're getting a slow move gradual to the upside. So I wouldn't be too surprised if this is just one of those, another move to the upside before we start to get some more selling leg coming out of this level through here. I wouldn't be too surprised if we actually started to get a movement to the downside out of here now. We're getting this movement here. I'm going to show the reasons why as well too. And then looking at the Nasdaq, the Nasdaq is still the weakest one out of the whole lot of them. Like if I squeeze my Nasdaq, if I squeeze my Nasdaq chart up, you can see, look at this here, right? We're going all the way through there, right? So we're still in this sideways range. We're still developing these major lower highs. So especially the Nasdaq, I wouldn't be too surprised if we continue to squeeze up into this triangle pattern. So maybe we're not going to do much for another few months here, or for a few weeks at least. And then when we break, we're probably then going to likely to break hard. So the Nasdaq, especially the Nasdaq, I'm getting ready for a really good trading opportunity from there. Quick little update on the gold market as well too. As you can see, look at this here. The gold market has indeed created that false breakout, and we are getting the very big move to the upside right now. So what I'm probably likely to see is gold is probably likely to have at least a bit of a short-term pullback. We have had a nice move to the upside. So what's probably likely to happen with gold is we're probably likely to have a bit of a pullback here, just what I call a reset, right? And then we're probably likely to start to see a complete higher low, so low, and then this will be some sort of a higher low right here. And then we're probably likely to then see, once we get that, which would be something like this, right? once we get something like that, then we're probably going to start to see a real big move up to probably even up towards these highs again when it comes to the gold market. So gold is looking at that through there. So what I do want to share with you is I want to share this with you here, right? There's starting to be a lot of greed across the actual markets right now. And last time investors were this greedy, like this is actually the graph here. Let me see if I can zoom in a bit more. Right, so this is the actual graph here. There we go. Okay, cool. There we go. That's what I wanted to get. So as you can see, right, with this graph, you can see that when it gets up to this level up here, which is the you can see the readings, right? So we have 100 is like maximum greed and 0 is maximum fear, right? So fear's 0, greed is 100. And every time that we start to get into measure this on a few bases here, if you just go to CNN fear, if you type in fear and greed index CNN, then you'll be able to see this, right? So the last time back at the start of the year, it got up to 65 on the scale before it actually sold off, which tends to happen when the stock market sells off, right? Stock market goes to a rally, then they get greedy, then the market comes back down. Then we had another move back up in April, and we got to 62, and then the market moved down. Then we had another move up in recently, right, in middle of August, and we actually got to 68 before we started to peak out, and then obviously the market sold off again. Look where we are right now. Where we are right now at the 68 period. This is exactly what actually happened last time. We had a very strong rally in the markets, and we got greedy here. We got to the greed here. And then when investors started to get greedy, then the market actually sold off. And it looks like it just updated. So where did it actually close? Did it close any higher? It looks like it actually sold off a little bit today, but we got to that 68 period. But anyway, so you can see what's happening through there. So investors right now are getting really, 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 really greedy in the markets here. And if I scroll out, you can see what we're looking at here, right? So we've got like obviously the momentum of the markets, but we've got like the stock price index, the breadth, the put to call ratio. You can see out of all these sort of indicators they use, 1, 2, 3, 4, 5, 6, 7 out of 7 different sort of indicators they use to come up with the number on the fear and greed index. We have 1, 2 that are neutral, 1, 2, 3 that are greed, and also greed, 3, 4 which are greed and extreme greed, and 1 that's fear. So that tells me, by looking at the actual stock market itself, we can see that the overall stock market, we're probably likely to get a bit of a pullback here, because we are overextended, as you can see on the markets, like with the Dow Jones. So we're probably likely to see that pullback happening in through there. So last but not least, guys, what I want to talk about right now is the Fed pivot, the Fed pause, and so on and so forth. Let me bring this back up to here again, right? So if we actually look at the actual, let's actually go up to the interest rates, right? So we can bring up, we can go to the Fed pivot, the Fed pause, or even just looking at the interest rates in total, right? Well, this is the 2-year, and obviously the 2 years actually had a very big move up. Looking at obviously the 30-year, right? The 30 years had a very big move up, and we're getting a pullback right now, and same for the 10-year, right? We're getting all these sort of pullbacks through here. But if we have a look at the big picture on these interest rates, in the next crisis, which is likely to happen over the next, say, 12 months or so, in the next crisis, what's going to happen, right? The Fed is going to do what? What is the Fed going to do? They're going to drop interest rates, right? That's what they do on their end, right? That's the Fed's fund rate, okay? But then also, what are they going to do? They're going to print a lot of money. And when printing a lot of money, what are they going to do? They're going to print a lot of money. And just like when last time they printed a lot of money, they obviously pushed down interest rates to start to jack up the economy again, right? So where we are right now, we're here. I don't know if we're at the top or not. Okay, I'm not sure if we're at the top or not of these interest rates, but there are markets out there that when we're looking at as an investment opportunity, right? So we could actually start to do something like this as well too, right? And then maybe we start to get something like that in the crisis, okay? But I'm very, very, very confident we're going to end up back down here somewhere, around here. I don't know exactly where, but down here, when the Fed starts to do the complete not only pause but then pivot, pause, and then reverse, right? And then they start to do the QE again in the next crisis. So how do we actually take advantage of that as an investor? Okay, remember, it's not a trader. We're not trying to pick the bottom, but as an investor. So if we have a look at a market like TLT, right? The TLT market. This is a market here that if we have a look at this here, once the Fed does pivot, and we don't know, right? We don't know. If you, I'm not actually in this right now, guys. So I'm not actually buying this right now. So I'm not, again, I'm waiting still. But right now, right, this one right here, we still could actually have a bit more of a leg down, right? So what I'm looking at here is that I'm very, very confident in the next, say, 2 years, that even if we do get this leg down here, we're probably likely to see a rally back up to 130, 140, possibly even this sort of range up through here. So if I can buy it down here somewhere and sell it up here when they do pivot, or when the overall market starts to shift and the interest rates and so forth, then that's going to be a good trade, right? And if I look at the overall markets from just looking at, maybe even potentially like looking at the TMF, right, which is the 20-year, 3 times I'm trying not to confuse you guys here, so I'm trying to keep it really simple, right? So here's another one that's obviously the inverse, right? When the interest rates start to go down with the 20-year, and they will, guess what? And if they go down, then obviously then this is going to start to go back up, right? So I'm not saying that this is going to be the exact bottom, and I'm not in this right now. We still could get a bit more downside like through here. But I'm very, very confident markets even like this here, which right now it's at that, say, $7 level. I'm very confident that we could possibly be back up towards this 32 level, possibly even higher once the Fed does pivot over the next, say, 1 to 2 years. Makes sense? So this is an investment opportunity. I'm not trying to time the bottom. I'm not trying to pick the bottom. But this is an investment opportunity that I'm looking to do myself. And again, it may be wrong. There's no guarantee this is actually making a profit. And again, I'm not in this right now. And tomorrow I may change my mind. So I'm not telling you guys what to do. I'm just saying that as an investment opportunity, this looks really, really good play. Again, I may not get, if I buy it tomorrow, then I may not get the bottom. I may miss the bottom for a good 2, 3, 4, 5, 6 months, right? And it may continue down for a little bit more like here and then possibly reverse. All I do know is that within, say, the next 2 years, I'm very confident of seeing this sort of print up here. So even if I don't get the exact, even if I buy it here, but the market does continue down a little bit more, to me, all that matters is that I'm very confident of seeing this move here because of the overall pivot in the markets. Make sense, guys? So there we go, traders. I hope this helped you out. Once again, traders, make sure you click on the very first link in the description. Go over there right now, and I'm going to give you a training that I just recently did, walking you through all the details to my actual trading system, how I actually trade the markets. And then also, I'm doing something just crazy here. I'm actually giving you a free trial to my entire private Inner Circle coaching program. Allow you to try it all out for free. And if you are really happy with it, then you'll be happy to pay. And if you're not happy with it, then obviously you don't pay anything as well too. But I'm doing that for today, guys. First link in the description, go check it out.